Richard.
Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I am your co-host, Jamie Bateman, along with Chris Seveney, and our special guest this evening, Debbie Mullins. Chris and Debbie, how are you guys doing today?
Good. Thank you for having me.
My brain's fried, so that's how my day's been today.
Full disclosure, Chris and I just did a podcast recording that ended about half an hour ago. So, Debbie, you're going to have to carry us on this one.
So you stop long enough to eat dinner and then jump on this one?
Well, actually, no. What I had to do is I had to go do multiplication flashcards with my son in between because we have a goal of knowing the multiplication table up to 12 by Christmas. So that's what I did in between. Played dad.
That's a good dad.
Yeah. So today, like Jim mentioned, we have Debbie Mullins, who has a bookkeeping firm who does a lot of the books for many note investors and also does some consulting to teach note investors, if they don't hire her services, how to do the books properly, because this is probably one of the most critical aspects of the business that people really need, for me personally, should focus and spend more time on. So without that, and I think Debbie needs no introduction. So Debbie, it is all yours.
Okay, well, hello everyone. I think when I'm looking at my document here, I am looking fairly close to the camera because when I look over here at Chris, that's what you're seeing when you see me this direction. Plus, if I have something on my other screen, but I don't know where to look, in other words.
It's okay. Everyone's only looking at their screen and not at you because you're going to, I'm sure, show some interesting magic tonight.
Okay. So that's true. I guess one of my next slides should have actually said, what is the most important part of your note investing company? And Chris kind of jumped on that bookkeeping is very critical, but it is the most important part because you're running a business. So your books are running a business. So let's just start there. So it's very important. And so tonight we'll sort of be talking about bookkeeping in itself, but it's going to sound like it's more like how do you run a business, right? Because it really is related. It's almost one in the same. Everything you do in your business affects your bookkeeping. So when I usually talk, I usually am referencing an LLC type structure because that's what most people have. But just know what I say could vary a little bit depending on what type of entity you have. So with that in mind, I find that when I start working with people, they think of their how do they think of their LLC as profit or income? And how does that work on their taxes? Because everyone says, oh, it's a pass-through entity. But if you actually looked at your tax return for a business, there's going to be a Schedule C in there. And the Schedule C is the profit or loss of your business. And whatever that bottom dollar ends up being on your Schedule C, it rolls onto your personal taxes, and that's what you get taxed on. So sometimes people don't quite understand how those two connect. And then sometimes they tend to lessen the importance of their LLC as a business because it's a pass-through and it's just like my personal money. But it's really not. It is a business, and you want to run it like a business, not like it's your personal funds.
Yeah, and to add to that, it's, everything in your business should keep separate from your personal. It should be a separate bank account. It should be everything should be separate.
Nothing ever should commingle at all, and not between LLCs, not between personal funds. They're all separate entities. And so you have to be careful that you don't open too many LLCs or too many entities. I was not referring to you.
Did I tell you I have 3 more that you need to add to the books?
Me
sorry.
too.
2 or 3? 2. Yeah, it's 2. I'm sorry. Yeah.
I have to say, I don't think I know this third one, but
not yet. Jamie and I are working on that one behind the scenes.
So you can have many LLCs, but just remember why you have them. I think that's the biggest thing, because people open them and then they really can't even keep track of them. Or like, I don't remember what the purpose of this one was. And so just don't complicate your world too much along the way. And with that, I know that there's a lot of advice to open an LLC, and one LLC could own the other LLC, and then second LLC could pay the first LLC a management fee. And they do a lot of that. I know you guys talk a lot about asset protection, and not to downplay the importance of that at all. But again, just don't overcomplicate it if you don't need to have that. And don't get scared from asset protection. And I'm only saying that, from once or twice removed, but I work with a lot of investors who have 50 houses in one LLC. But I see people freak out when they have like 3. So just know that if you're running your business properly, chances are you're not going to be in a lawsuit. Or if you are, you have insurance or you have a really good attorney. Most of my investors who get sued win their cases. So
Yeah,
don't open too many LLCs.
I've seen people who have an LLC for every note, and I'm like, you have to be nuts.
Yeah.
And I'll be the first. I do have that LLC owned by an LLC, and I'll put the stipulation. The only reason I do that is because I have a podcast and do a lot of things through a company, Seveney Investments, and Seveney Investments actually does not buy notes. So that's kind of, I'll say my.
And it can work for sure. Yeah.
It can work. There should be a reason, I guess.
Yeah, but I literally have people who say, well, so-and-so, we set it up that way, and I don't really remember why. And they're trying to generate income over here so they can pay a management fee to that LLC, but there's no income over here to pay the LLC. And so they really struggle with it. So, when you need it, great. It's nothing wrong with it, but just don't overcomplicate your life.
I saw a post online where somebody had 2 rental properties, and they spoke to one of these companies that help you set up this on a website, Bigger Pockets, and they told the people that they needed to set up a S corp, 4 LLCs, 2 trusts, and a personal trust, and they would do all of it for $14,000. And this person literally had 2 rentals that cash flow like combined $500 a month. And I saw that, and I'm like, oh my God.
Yeah. That's exactly what I'm talking about. And that's why I want to mention it, because I hear it a lot of time in these groups. And I mean, most people are just learning how to run one and try to keep their books. And these structures just get crazy. And like I said, it all centers around hiding and protecting assets. But until you have like a ton of money and a ton of assets, you're probably okay for a while.
Yeah. And just to really quickly piggyback on this, Chris and I have talked about this on the podcast, but this is also another reason people don't get started in investing, is because whether it's notes or real estate or anything, they get so stressed out about how this is going to be structured, how they're going to structure their business. But it can change, and you can tweak it, and you don't have to have it all figured out before you take the first step. That's all.
Yeah, for sure. And it can be overwhelming. So, just start out with the basics, right? But I do see people who again, you just think of it as your personal transactions, but just remember you really are running a business. And so what you're going to hear me say a lot is, would Home Depot do it that way? And so as we go through this, you're going to see some examples of that. So, Home Depot runs a business, so you have to run a business. Okay, unless you have any questions on that, we're moving on. All good?
Yep.
All right, so a lot of times when people call me to start asking about services, they're always like, I don't know when I should start with a bookkeeper, and that's a question. So here are our 5 options. When you open your business checking account, when you paid for your first class to learn about investing, once you buy your first asset, once you apply for your LLC or set it up, or once you own 5 or more assets. When do you need a bookkeeper?
I'm going to let Jamie answer that because I'm afraid to answer because I'll get it wrong.
Is this for the group or for
everybody? Anybody who wants to post a Guess.
Yes, people in the chat, guess. I won't name names of who guess what. I've got mine, I think. So we've
You
got,
tell me. You're watching the people, so you tell me when you're ready.
so we've got a B, we've got an E. Good joke. My daughter went for, while we're waiting, my daughter went for her learner's permit this past weekend, and I joked her, I said, if you don't know, guess C. That's always her joke. Said the same thing with the SATs. So we got an A, a B, and two E's. I would have said A as well. Jamie?
I'll say C.
Okay, so when you decide to be a note investor, then you are starting to run your company, and your books need to start from day one. So that would either be maybe the day you're applying for your LLC and opening your checking account all at the same time. A little bit of crossover there. It would not be B necessarily, because you start paying for things. Sometimes you're learning before you decide to jump in. And so you wouldn't have to start bookkeeping at that point, because you may never decide to jump in. But once you have your LLC and you're like, okay, I'm going to set up my LLC or my sole proprietorship, open my business account, and I'm ready to go, then you need a bookkeeper. However, it doesn't mean you have to hire one. You can be your own bookkeeper.
I think that's where some
From
people
day one.
I think some people were thinking on E, it's when should I hire one?
Yes.
Which, you can hire one, whenever you get tired of trying to figure out QuickBooks, which for me was pretty much, 2 days after A, I think. So.
Yes. Yes. And that was a little tricky because it wasn't hire exactly. It was, when do you need a bookkeeper, or when do you need to have books? When do you need to have QuickBooks? When do you need to have a formal set, a profit and loss and a balance sheet? And that's from day one. But if you didn't, you can always backtrack. So that's okay. Okay, so when we start our business in QuickBooks as well, and just a quick thing on QuickBooks, FYI, I'm a big QuickBooks desktop person. I don't use QuickBooks Online for many reasons. It's very cumbersome to use. The desktop version is just quick. It's easy.
Cheaper.
And yeah, it's very intuitive, and but mostly it's a lot cheaper to do that. So you're paying monthly forever, or you can spend like $300 and it'll could last you 5 or 10 years, just depending on, it could last even longer just depending on your CPA though, and if you're trying to transfer files.
It lasts as long as till your bookkeeper upgrades to the latest version of QuickBooks.
Right.
Exactly, which can also be the CPA. Exactly. I never upgrade unless I really am forced to, because of having to share with a CPA. So absolutely. So that's my thing on QuickBooks. I can help you with QuickBooks Online, but I do not work with it. I have everything on the desktop version. Okay, so when you set up your QuickBooks and your company, so one and the same thing, I'm running a company, I have to set up my books. So it's always bank accounts. And so I'll see this too. You don't want too many and you don't want enough. So obviously you need a main checking account. Savings account is just an option if you like that, but I always suggest you have a company savings account. If you get into rentals, you need a separate account for security deposits. And then every company should have a company credit card. There's a lot of benefits to having a credit card. If you don't in the beginning, no big deal. I'm just saying eventually there's some benefits.
I finally got one, Debbie.
Business credit card?
Yes.
Yay. So I'll tell you right now, the number one awesome reason that you use a credit card is everyone you pay with a credit card, you do not have to send a 1099 to in January. So pay with a credit card, it's easy. And then come January, it makes your life even easier because you don't have to do 1099 on anything paid on a credit card. Okay, so I see people who set up way too many bank accounts, and then all they're doing is moving money around all the time. So,
and that's and the reason I see that, Debbie, is there's some people out there who teach classes that say if you set up like with 3 different banks and transfer money from one to the other, it will get you credit faster. Now, I don't believe that. I think credit is more based off of building a relationship with that bank and, keeping, things status quo and having good credit and paying your bills on time. But
Yeah.
they kind of come up with this flow chart that is like, hey, set up these 3 banks and just transfer like $10,000 a month from one to the other and keep circling it around, which drives you nuts. But does it really, at the end of the day, help? Who knows? Because you won't know the difference whether you get the credit or not, whether it did help or not. So it's just, so people sometimes, again, overcomplicate things. That's one thing you'll see some gurus teaching you is, oh, you have to move out, shuffle this money around, which, I do more research on it. Just
Exactly. Because your credit does, it does increase the more you're just using good, you're not overdrawing your accounts, you're paying your credit cards. I mean, it does naturally grow. And those kind of things are definitely out there, I think, so people could get to where they can get massive amounts of money, or maybe really large investors and things like that, right? So, yeah.
It sounds like, Debbie, just for bank accounts, minimum, you need a checking, savings recommended. Credit cards are always good to have. And then security deposits, kind of least required, optional type thing.
Yes, except almost a little different. Savings account's optional. If you have rentals, you have to have a separate account for security deposits.
Okay.
And I mean, I'm in Texas, but I would think it's pretty standard that it's not your money, and it's it's like you should be holding it on their behalf. So I would have to assume that most states you technically need a trust account is what you'll also hear. So it's just a separate account where you hold security deposits.
Yep.
Okay.
Good. No
So
questions.
you set up your bank accounts. All right. So then we get into bookkeeping, and this is what a check looks like in QuickBooks. So if you haven't opened QuickBooks, you haven't seen it, and probably other similar programs, it's pretty intuitive if you see a check that looks like this, right? You know how to fill it out. You put in the date, you put in who are you paying, the amount, the memo. And when I say a check in QuickBooks, it's just any payment out, a wire, electronic fund. Those are all, everything's called a check. Everything coming in is a deposit, regardless of how it comes in. Yeah.
You didn't put in bold or large enough letters that top line.
Oh, just getting ready to talk about this. Bold, red. Okay. Would Home Depot pay their vendor via PayPal? Probably not. Would they use Venmo to pay a vendor? Probably not.
There's a new one called the Cash App as well.
I've heard of that, yeah. You are running a business, which means you should have business-to-business transactions. And in a little bit, well, I could probably open it. Hold on.
So paying the guy $200 on Craigslist to trash out a property via PayPal is something you should not do.
You should not do it. However, I do know in this business that sometimes you got somebody, you're going to pay them $25 to drive by a house. There are certainly those times that you're going to use those type of things because they're not a business. You have no other way really to pay them. So when I say things, there's always an exception. You can always do whatever you'd like or whatever the situation is.
Like the tax code. This is what you should do, but there's always an exception somewhere.
Yes, but running a business is business to business, right? Like I was an accounting manager at an aviation insurance company. Would I have ever paid back somebody's insurance premium in PayPal or Venmo? So I would always write a company check, right? Like business to business.
So Debbie, you're telling me that when Chris sends me a PayPal invoice for Data Tree, I don't have to pay him?
He sent you a PayPal invoice for Data Tree? I don't remember seeing that on his book.
We can take that offline.
Because that's
I don't remember seeing PayPal on Chris's book. But Chris went through a lot of time and effort with banks trying to figure out how to do ACH transfers, which is bank to bank, business to business. How fun was that for you, Chris?
That sucked. I got it down. So, and I'll mention this because when you try to get, ACH is awesome, by the way. PNC actually through their Pinnacle program, it's like $40 a month, but it also includes same day ACH. So when you think of if you're buying an asset and wiring funds at $30 a wire, They basically cover, I mean, I could do same day ACH on 3 purchases. So it ends up saving me money in the long run. But because I just wanted to go the ACH route and get everyone lined up, get their W-9s and get it's in there, because send the bill pay to Wells Fargo and, or some of these banks like Wells Fargo, like if you put in a check to the same person, like Satilli and Barilli, it's $100 for a demand letter. I have to pay 3 of them. You can't put 3 invoices with the same amount for the same day. You have to stagger them. And it's like, or you put it in, or one might get bounced back. It was very painful. So, yes, the ACH is definitely the way to go.
Yes, business to business. And so I'm going to jump ahead just a tiny bit, just to show you. This is a P&L in QuickBooks, but this column right here can you see the Excel spreadsheet?
Yes, we can.
Okay. When I import, this is exactly what it shows on your bank statement. See these all caps, even the small ones. It'll say this check, mail. See how it says these are business to business transactions. But Venmo will say Venmo. Sometimes it'll have a name, but sometimes it doesn't. Or PayPal, same thing. Like it'll say, oh, paid via PayPal. Well, then you paid PayPal. You didn't pay a person, right? So your books need to be a history of what happened. And so let's say you were audited, and you'd be able to look at that and see exactly who you paid and what for. But with that one, you'd say, oh, now I have to go look at my PayPal statement to figure out what happened. So that's your clue, right? There's a third party in between there. You want everything to be paid directly to whomever it's paid to. That's a hard one for people to get, because you want to do it fast. Because that's always said, oh, I got to pay them fast. There's no fast in business. You want to do it right.
So Debbie, I have a quick question on that. So a credit card isn't the same thing then? I mean, isn't a credit card a third party that would appear as that credit card name on your...
A credit card comes through just like what we were looking there. The credit card has a line item exactly like this. It shows exactly who's paid.
Okay.
Right. So so it is different. And here's one of the differences again. We don't have to send a 1099 to anyone paid with a credit card because the credit card companies report that. And so that's the other thing. If you're paying PayPal, now you're not paying John Smith Plumbing. And so it gets a little messy when you're trying to send your 1099s.
Gotcha.
Right? Yeah. So credit cards are still good and they help build your credit.
Okay.
All right. So when we are entering a check in QuickBooks, we have again the date, the name, the amount. Down here at the bottom, where it says account, that would be like we're coding it to a telephone expense or we're coding it to an asset. So for anyone who saw the last podcast a long time ago, you'll know the answer to this. But for everyone else, what is the most important field that we fill out on a check? Date, name, amount, the memo, right down here, the account. Any guesses? Anyone typing a guess?
Yeah, anyone want to type in a guess? Oh, somebody raised a hand. Feel free to put it in the Q&A or chat. Pay to the order of. Who you paying? 2 people said who you paying. 3 people who you paying. Somebody said seems like they're all equal. They're all important.
Oh, now I can see that. I couldn't have it open earlier. There we go.
Okay. All important.
And I see names. I see who's here. All is important, absolutely. But the most important field is the name. Pay to the order of. So you have to have a W-9 for everyone you pay, all of your vendors. And so you cannot fill out this check if you do not have a W-9 to know how to fill it out. Okay, so W-9s and 1099s, we're going to talk about those. So if you see, here's my W-9. So the first line is, what is the name on the tax return, right? But then what's my business name? So who do you pay? you pay the Colton Group. That's who you're paying every time. And so what I'll see in people's books is that they pay John Smith, and then the next time they pay Smith Plumbing, and then they pay John Smith, and then Smith Plumbing, when it's really the same person because they're going fast, they're Venmoing some money to somebody here or somebody there, right? So you have to know who you're paying, you have to know their legal name, and you have to do it to that name every time because you're going to report to the IRS who you paid. And if you paid John Smith, but it was really Smith Plumbing, you really can't have a check that says I paid John Smith and then say that you paid Smith Plumbing. Because if you were audited, it would look kind of, oh, you're John Smith's trying to hide his personal money over here.
So one thing I want to add is some people buy notes or invest with their IRA. And I put this in like 72 font when I send this to people, because a lot of people, when they invest with their IRA, are like, oh, I know I'm not going to get, shouldn't get reported because it's an IRA, but sometimes they'll put on this form their personal information and their social. And what I tell people is that is the worst thing you can do because, you, Debbie, or my accountant, they don't know who, this individual is, and they're going to see a W-9 that says, oh, here's this person's information and social, and all of a sudden they're going to 1099 them when it doesn't have the IRA, Quest IRA or New View IRA on it. So, just like you mentioned, people, this is, who you're paying, or also if you're getting paid, it's who on your end is getting that money, and your IRA is different than you. So I want to throw that out there.
Mm-hmm. Yeah, absolutely. And even if, let's say you're doing a JV partner and you're just transferring money between the two of you for different reasons to buy assets, and it's not really even like vendor situations, you should still have a W-9 from anyone that you work with. And if, I've said this before, if someone will not give you a W-9, you should not work with them. There is nothing secret about any of this information on here. And it would show you're a legitimate company, right? And there's so much fraud out there. Like, who would not give you a W-9?
I know one investor who's like, somebody's like, she's like, somebody asked me for a W-9, and I'm like, yeah, you should give it to them, because if you charged them for something, or did something for them and they paid you, yeah, I don't want to pay taxes on it. That's not your choice.
Yes.
And Debbie,
you have to get the W-9 before you pay them, because otherwise you'll never get it.
So for people who
go
ahead, Jamie.
Oh, sorry. Go ahead, Chris.
I was gonna say, for people who work in the corporate world, like for in my corporate world, like I cannot get a check cut through the accounting department until like they have a W-9 and ACH information from a vendor. It's like, no, you're not. I mean, it's normal in every corporate world. Like, don't feel sorry or afraid to ask somebody for W-9. It's like, basically, it's common. So most people realize that until you give that, a lot of times people aren't getting paid until that information is provided. So it's not like it's uncommon. It's not like you're asking for something secret. Like Debbie said, it is like required.
Yeah.
Yeah. I've had times where the company will say, I mean, you don't need it, but here it is, but just.
Yeah. And that's okay. Yeah.
But there is a common misconception about the $600 thing, I guess. I don't know if you were going to touch on that, but the 1099 doesn't go out unless it's over $600 for that calendar year, I believe, but you still need a W-9. Is that correct?
Yes, absolutely.
Okay.
So I'm going to do that right after this. So, and here's what you can tell people is, if you're using QuickBooks, here's your vendor, right? And you've got to put in this information. And right here, you have to put in, whatever, like tax ID number. This is where you put that information in, because your system's going to generate 1099s for you. Mm-hmm. So if you don't have their W-9, then you can't enter them in your system. And then that means you can't pay them. So that's why I tell people, I was like, well, I need to put you in my system so I can pay you. I need your W-9 to get that done.
Right. By the way, for people listening too, if you have questions on any of this, feel free to put them again in the chat or under the question. We're happy to answer anything that, during this that comes through. You don't have to wait till the end. So I just want to mention that as well.
And the other thing is I've seen people like, they'll forward me an email with, somebody will send them this information. Well, here's my name, here's my company name and my EIN number, and they email it to them, right? And I'm like, no, that doesn't work either, because, oh, sure, John Smith, I'll just believe you that that's your name. And at least with this, you have to sign it, or they have to sign it and date it. So the other reason you have to have them is for compliance for your business. So if you're audited, you have to prove that you are working with legitimate vendors, right? You're not just writing checks to some fake company name that's really you. You're just trying to make more money on the side and record an expense in your company that didn't really happen.
Jamie,
So,
busted.
busted. Money laundering.
I've got a couple weeks to clean it up, I guess, for
Stop
this
it.
year.
Yes. And if you ever go back and try, like I said, after you try to go back and get it from them and you've already paid them, forget it. Like, they're like, oh,
Yeah.
I'm not sending that to you. Again, they should, but so this is your proof, if you're audited, that you have legitimate companies. And if even if they lie, they have signed it and dated it, right? So they are being fraudulent, not you. Okay, so you have to have a W-9. Large, bold, red. How big?
Debbie, I had a question for you, because you mentioned like don't accept payments and stuff from PayPal for investors either. Is there an app, or is there a type of, I'll say, service that you recommend? So, like, hey, don't pay people through PayPal, or, so forth. Is there something besides, writing someone a check where they can easily get money back and forth? Is there anything?
Like Zelle or something?
I do have, okay, so there would be a wire. That's a lot of money with your bank, right? 15, 30 bucks.
Mm-hmm.
ACH is awesome, bank to bank, business to business.
Mm-hmm.
Most people don't want to write a physical check, but in the business world, there's still business checks flying everywhere. But Deluxe, have you heard of Deluxe? Like you used to order checks from Deluxe online.
Okay.
Well, they offer an online check. And I learned about this. One of my clients sent me a check that way, and it was really awesome. So you just go to deluxe.com, and I don't know how much it is per check, but I think it was minimal, like, I don't know, 50 cents. I think it's minimal. And it came to me in an email, and it looked like a check, but I could just print it out on the computer and take it to the bank, or I could just snap a picture of it and do my mobile deposit. But it is like a business check. It has the business name on it that it came from. So I really like that. Deluxe checks.
Okay.
Not deluxe ordering checks, which you can still do that, but actually online checks that you can email to somebody.
Okay.
That's the easiest way to write a check without, ordering them or doing wires or ACH.
Okay.
Yeah. But there's no third party thing out there that I would recommend. Yeah, good question though. I really like them. Okay, so Jamie, 1099s. So I hear this all the time, you don't need a W-9 because you don't have to send me a 1099. And that's just the hardest thing to overcome for people. They are not the same thing. The W-9 is required. You need to work with legitimate vendors. Now, if you pay that vendor more than $600 a year, and this box number 3, if they're a certain type of entity, then you're going to send them a 1099 at the end of the year. And they weren't paid with a credit card, right? But if they're a C corporation, if they're an S corporation, they are not going to get a 1099. So how would you know if you don't have their W-9? Come January, you're like, who do I send the 1099 to? If you don't have a W-9, there's no way you know if they need one or not.
So
No matter how much money you paid them.
asking for a friend. During the year you changed from an LLC to an S Corp, I'm guessing you'd have to send new W-9s. Asking for a friend.
Okay, so that's your entity. Every entity has to send 1099s.
Yes, but if people ask for, like, say someone's like, oh, I need a W-9 because I'm sending you money. I'm like a servicer.
Right.
You know,
Oh, a servicer. So they just need to send you a new W-9, right? Because if they, if they've changed their entity, they should be sending out new W-9s.
I should send them, my friend should send them a new W-9 because they're,
Yeah, but by the end of the year, if you're an S corp, then yeah,
okay.
I wouldn't worry about it. Usually, if you change mid-year, though, they allow you to backdate that, right?
Yes.
So I would think if you're going to change entities, you would backdate it to the beginning of the year.
Mm-hmm.
So the whole year would be an S corporation anyway. Maybe.
Makes sense.
That's
I would think it's how you file how you're going to file for that year.
Yes.
Right.
Yes. Yeah. So if they change, as long as they send you a new W-9 and you know. But I had a client that just this last January through March, they hadn't looked at their books. Their books were kind of a mess. And I was actually just taking it over at the first of the year to do 2019. And so there's no data in there. There's no names in there. We're trying to put this together. And there's no way when you start on somebody's books in January or February that you're going to issue 1099s in January. Mm-hmm. So we were kind of having an issue just trying to get everything caught up. But they were very antsy about wanting to send their 1099s. And I'm not going to send them if I know it's not correct yet, right? Yep. We're starting too late. Mm-hmm. I'm not going to send those, but I'm like, they could send them if they wanted to. But they sent me a list of everyone that they were sending them to. And I think there were probably 14 or 15 on the list. And at least 5 of them should not have gotten a 1099. Okay, because so you really want to know by January who needs to get one and who doesn't.
Yep.
Okay, partnerships get one. 5013Cs, because sometimes down here under other, you'll get some, or like IRAs, there's certain ones that do or don't.
Yep.
And of course, irs.gov, there's always an instructions how to do 1099s that can tell you, but you don't know. If you don't have a W-9, you don't know. So we use the W-9 so that we can determine if we need to send 1099s, but they are not one and the same.
W-99, the way I look at it is, it's the initial step you need to put somebody in QuickBooks. I mean, it's, that's really, and someone says, hey, look, I got to put you in my system. I need the 1099. I'm sorry, the W-9 is kind of.
Yes. And when you get these, you need to be able to look at them and see if they're correct. Because if they put in a social security number and an EIN number, then the person they just don't know what they're doing, right? And I've seen that all the time. Like, they should know how they want you to report to them. And so sometimes you have to help people along. Or they don't mark anything in box number 3 because they don't know what to mark. That's a big.
So Debbie, asking for a friend, is it a bad sign if your former bookkeeper fills out their W-9 incorrectly? Anyway, moving right along. I've seen
stranger things. Yes. And I can tell you that 2 of my clients just in the last month have emailed me. They got letters from the IRS saying, hey, something wrong with your 1099s that you filed. Like, the number didn't match, the name didn't match, right? And we did it, correct. We have the information out there, but the person obviously didn't fill it out correctly. Okay, so what else do you need to know there? So they're very, very important, and they just guide you, right? They tell you everything you need, and they keep you in compliance. All right, anything else on that subject that I talk about a bazillion times a year?
This one's going to be the topic that is, I think we'll spend a good amount of time talking on.
Deposits?
Splits.
And deposits and splits and servicers. So, so this is kind of what sets you guys apart from bookkeeping. So, so with this, we're going to talk about the profit and loss statement. For people just getting started, you don't even really know what these reports are, right? So the profit and loss has income at the top, and expenses at the bottom. And the very bottom dollar is your net income. And those are really good for service companies, even like me doing bookkeeping, right? I have my income, I have some computer expenses. Bottom dollar is how much I made, my net income. Investors end up using the balance sheet a lot. And so the balance sheet is the more complicated report. So it's a little bit of the higher level report. And it has all of your assets at the top, all of your, everything you own, your bank accounts, all of your assets. At the bottom are all of your liabilities, credit cards you owe, JV partners, anything like that. And it has your equity as well, like your owner contribution and your owner draws. And so because you guys work with a lot of assets, you're really balance sheet heavy. Okay?
I'll mention a balance sheet is named that because it should balance your assets equals your liabilities plus your owner equity. So
Yes, all of your books should actually balance. Every part of it should balance.
correct.
Or reconcile. You'll hear that name a lot too. Reconcile.
Mm-hmm.
So the general rule is if your balance sheet is correct, your profit and loss report should be correct. So I always try to start with the balance sheet when I'm reviewing it or working on it, and then move over to the profit and loss. Okay. So because you guys have a lot of assets, you hopefully are getting deposits from servicers or when you're maybe even selling assets. Let me trying to think. I didn't open something that has, so Madison, for example, they give you a deposit and it's for 4 different houses, and it's principal, interest, servicing fees, advances, which are maybe you've paid for the taxes and now the borrower is paying you back for the taxes. So you could get a report from Madison that is 15 lines long. In QuickBooks, you're going to have 15 lines to match it, right? Because you have to break out those reports in the books exactly like the report is. You're going to code some of it to the principal of the asset. You're going to code some of it to interest income. You're going to code some of it to servicing fees. When you get money back on your repairs or your taxes, those are going to be some holding costs. So there's a lot of breakouts that you do.
Yeah. So if you're getting a check for $500, you just don't put Madison $500. And one of the things that I'll throw in here is because people who do JV deals, how is your deal structured? Because some people will give a 50-50 split, but what are you splitting? Are you splitting the profit, which is the interest? Are you splitting the payment? What, no, and if you don't delineate that or put it in your books, no, people will call me up and say, well, and I'll say, what's your agreement say? And it's like, oh, it's 50-50 split. I'm like, of what? Because, the principal as it comes back really, should still remain there for kind of expenses, and you should only be splitting the profit at the point in time. But it's really how you structure that deal with the investor, which is extremely important. And I think that's one correlation where a lot of people miss the boat is, your books are, very closely tied to your contracts that you have with other individuals.
Yes, and I think, yeah, a little bit below, I have a little thing that does kind of say investors, because a lot of times too, when people start out, that agreement Chris is talking about, the way it was set up doesn't match the books. And so they have a really hard time putting into the books what they've agreed to do with the JV partner, right? So I started a deposit here. Can you see QuickBooks?
Yep.
So in this scenario, we have a deposit down here at the bottom of $325, $100 principal, $200 interest income. So you made $200. Advances, you already paid $1,000 for taxes, and now you just got $50 back, right? So you're getting reimbursed. Servicing fee, this is a cost. So see how there's a negative because you didn't get the $25. You actually had $350, but they kept $25 of it. So a lot of people miss that. So like Chris was saying, sometimes there's just a deposit here of $325 and people think I just made $325. Where really the only thing you made was 200 minus the 25 actually. Okay, because both of these you're getting your principal back, and here you're getting reimbursed for some expenses. But like Chris said, now maybe you've decided, so let's say the Madison statement has 4 lines on it, and now we have 4 lines. But like Chris said, you agreed to split your income with a JV partner 50-50. So now you each get 100, because this interest income is going to go on your profit and loss. That's the money you made. This interest income you're going to give to your JV partner. So now you've only made $100 and not 200. So even though Madison has 4 lines on their report, now we have 5. Okay?
Makes sense for everyone. Just, I know sometimes this can go deep, but it's just, it's important people just to understand, unlike rentals where it's like, okay, I got $800 a month in rent. Great. Here, it's much more detailed. And then, where it also, goes on your balance sheet is, a whole nother animal, because your interest goes as a liability and principal is an asset, or is it vice versa? Backwards, but you can explain that.
And same thing with, ignore that, sorry.
We did have a question, in a
family-friendly show, Debbie.
Yeah.
I know.
So a question came through, typing in a memo loud to allow it to show up in categories. Basically, as you have an asset, basically there's a class in QuickBooks, which is all the way to the right. That class is typically the asset, but also within the asset, within the class, there's 123 Main Street. There's 123 Main Street, which is like holding cost. Correct, Debbie? There's
Right.
the asset will have, 123 Main Street might have 3 different classes, correct?
Yes, exactly. So what I had done on that deposit was I did not fill in where we actually coded. So that person was very clever that they noticed that we weren't assigning those dollars to any particular account. So right then, I really just wanted you to realize that that's why you're doing bookkeeping, is because you can't do all of that, what I just did in that deposit, you can't do all that on the spreadsheet, right? That's why you need your books to track all of those splits. So now we'll talk a little bit about those accounts. And then I just want to show you on a check as well. I wrote a check to Madison for non-performing notes, right? So I owe them servicing fees, and it's $25 for each note. So I wrote it for $50, but I could split this, right? So you can record it and hit each property. You can record it by property.
Yeah. So for example, I have caught 100 assets with forced place insurance. I don't send 100 different checks to the insurance JB Lloyd. I'll send them a check for $2,500, and then I'll take the invoice, and then I'll have that in an Excel spreadsheet and send it to Debbie, who will then take those 100 assets and then put under this amount. It might be $2,500, but then there'll be 100 line items under this one account with the class and the amount for each one. So, you don't have to break it. You don't have to pay by each individual asset to that vendor, but you just need to make sure that your bookkeeper understands how that $50 or $1,000 is segregated into which asset. I hope that makes sense for people.
Yes. And so I've seen Madison invoices that are 8 or 9 pages long. And so this is like 50 lines because there's 50 different assets that are all charged $20 or $15. And we have to break it out by every single asset.
What about the Orion ones for 10 cents? How are those, Debbie?
Thank goodness Chris lets us just put those on the P&L now. Yeah, I've seen, I mean, there are like hundreds, there could be hundreds of lines, and there is a limit on this on QuickBooks. I mean, I've put a lot in a check before, but there is a point where only once did it stop on me. And so I had to rethink how to enter it. But
that actually touches on a point that I wasn't apparent to me at first, that, you know, as note investors, non-performing assets require more work typically, but from a bookkeeping and I guess from a servicing standpoint, in a lot of cases, the performers are much more work. So
yeah,
it's just an interesting dynamic there.
right. So for your day-to-day, it's completely the opposite of your bookkeeping.
Mm-hmm.
Yeah, because the more, you know, every transaction that happens in the books that hits the bank account, the more breakouts probably that you're having to do. Yes. And so even when we had that deposit and we were talking about like the interest, there's interest income you can code things to. You know, if you have an interest expense, there's, you know, you pay interest on your credit card or something. So these are all called the accounts, right? There's all kinds of rental properties. Rentals get broken out in a bunch of different ways. So these are called the accounts, and this is your chart of accounts. You'll probably hear that as well. So when you first set up your QuickBooks, your chart of accounts is specialized by industry. The service industry uses a different chart of accounts than an investor uses. Okay.
And this just goes, and again, another reason why to use a bookkeeper is after you foreclose and you take a property back, it moves into different accounts on your balance sheet, and it's treated differently because it's got depreciate. It can have depreciate. It has many different things, which, you know, for me, I don't know what they are, and that's why I'm just like, I tell Debbie, hey, we foreclosed on this one, this date, and you and the tax person figure it out.
Yeah, because see when I pop up rental properties, and this is only a few, there can be a lot of other categories, but when you own an asset for a rental, it's split out by building and improvements and land, where if you have a note, then it's like this. It's usually just 2 lines for each address, just the asset that you own and then some holding costs.
And
A flip house, same thing.
And holding costs are typically, like I said, your forced place insurance, your servicing, your legal advances. If you know, have an order to BPO, title report, all those things are kind of, it's basically, it's your expenses that you've had go into the holding cost.
Yes. So just to take it one level, even a higher level, we do put those costs. Anything that happens on the note, we put in that holding cost on the balance sheet. So that's a big thing. People think it's an expense, right? I paid that insurance, I paid that servicing fee, but it's not necessarily an expense that goes on the profit and loss statement. Like I have some income and I have my expenses. So holding costs mean, because if you see here, my holding cost, see how it's a fixed asset? So it's increasing the value of your assets. And so you're collectively gathering all of that cost in one place. And that's really important, especially if you have a JV partner, because you want to see everything together, the total cost. But down the road, things can change. And if, this may not make a lot of sense just verbally, but down the road, if you are making a lot of interest income and you own the note, there's no JV partners, you can start capturing some of those expenses on the profit and loss to offset that income. So that's when you're starting to kind of get into a higher level. And that's when you're, after a few months or before the end of the year, you're really analyzing your books to see what you really should or can do with those expenses. Because if you're making a lot of money, then we can capture some of those expenses on the P&L. But again, non-performing, you know, I had somebody who had like 100 notes. They're all non-performing. He's paying servicing fees. So he literally, if we put those as expenses, he would have a $100,000 loss on his books. And you just can't do that. Like, they have to be on the holding costs. They have to just be costs that are accumulating. Because every year you can't have a $100,000 loss on your books.
Well, you can't get audited.
Or
Yeah,
if you can, you have a really good CPA, and I
yeah.
just wouldn't
So
want to.
I think that's important to people realize is your profit, and as you're holding this asset, the only thing that typically goes onto your P&L is any interest that's earned. You may have more expenses on the asset than money that you've made in, but on your taxes, you may actually show income because it's all in that holding category until you liquidate that asset. So I know that's difficult to think. So if you spend 10,000 for an asset and then you spent 5,000 on foreclosure, they made one payment that was interest, say it was $300 in interest on your P&L, it's going to show that $300, even though you're out $5,000, but it's kind of just, baking in your balance sheet for the time being until you liquidate that asset. You don't get to write that off that year. So
Yeah. And some of this might sound overwhelming also, but that's the nice thing about your books. If you start your books, you just learn a little bit each time.
Mhm.
And once you do it, then you're like, oh, now I have a good example of how I would do the next one. So you just have to start at the ground and just start learning. So I did pull up the P&L or a P&L, profit and loss, as Chris was talking about, as an example. And so this is the income, some interest income, and you can see little sub accounts by property. And you can see each month, okay, we're getting a little bit of interest income here. Right, so not bad. We kind of like that. And then we get a little bit of a late fee income too, because our borrowers clearly pay late all the time. And so the total income is 4308 right here. Okay, now you have all the expenses. And so I will have people who think they can now take an owner draw of, oh, I'm going to take $4,000, but it doesn't work that way, right? Now you have all these expenses just to run your company. Collateral, all of these bells and whistles of all the online services that you use. You have some interest expense maybe that you're paying to a JV partner. Postage, you had to buy some checks. I do want to note right here, this awesome bookkeeper.
Why are they getting such a deal?
Chris thinks they're getting a deal because he has to pay a whole lot more. So I just thought I would point out $1 million. Okay, so we might have to change that. Okay, let's do this. All right, we paid our CPA, we have our telephone expense, and then we did a little training class. Okay, so now we're losing money. We're down to 12, or have a loss of over $1,200. So there's no money here. So you cannot take an owner draw. You cannot take money out of a company that has a loss. And we're gonna look at the balance sheet next. That's a big thing. People put money in and then they do an owner contribution and then they think they're doing an owner draw. But an owner draw is taking money from the profit of your company. Okay, not salary. Oh, so here's on your Schedule C. So this is what's going to get reported, not the draws. Because I had somebody say, well, I took $30,000 out in draws. So that's what they're thinking is going to get reported as their salary from their company.
So here's one thing I want to So here's one thing I want to mention, because you mentioned that if you make $50,000 and you didn't take any of that money, you reinvested it all, you still got to pay taxes on that 50,000. So you better make sure you still have, cash that you got to pay Uncle Sam. So if you're in, call it, a 28% tax bracket, you got 14 grand that you're going to have to pay. And then you may have Social Security, Medicare, and all this other stuff. It's an LLC as a pass through. So don't think that when you make money, you can just reinvest it and it like hides that you don't pay taxes on it until you take it out. That's not the case.
Yes, because nothing on this profit and loss is an owner draw or an owner contribution. So you're paying, this is rolling onto your personal taxes, how much your company actually made.
And another thing, Debbie, just to add to that is instead of doing an owner contribution, you could do a personal loan to your LLC, and then make payments back out of your LLC. I don't want to get too complicated, but
I know.
that is,
It's really,
that is a
it's
way
hard.
to, yeah, that is a way to get money back out legally.
Right. Yeah, so I'll just jump to the bottom where there's no data in here, but down here on this owner draw and owner contribution section. So we just saw that the P&L has no profit, right? We're at a negative 1,200, but somebody might have taken 5,000 out twice, so they took $10,000 out. Well, we cannot leave it here as an owner draw. We have to code it as due from the shareholder because they took money
From the
that
company.
wasn't there to take. So now the shareholder owes that back to the company. So same thing. And sometimes if you put in an owner contribution, it can be a contribution to the company and that money gets used up, but it can also be put in as a loan from the shareholder too. So you have to think about that. And it can be adjusted down the way, but just know that anytime you do a loan, the IRS expects 3% interest to be paid. So even if you put the money in, that's going to be the differentiator, whether it's a contribution or a loan.
Never do a loan at 0% for anything.
Yeah.
Because the IRS will tax you at 3%. Even if it's 0% interest, they will still tax you.
See, that's why we have him. Okay, so the balance sheet has, again, the assets are at the top. So your bank accounts are your assets, right? Because however much money is sitting in the bank is an asset for you. So here's a big one. This was an education class, $1,000, and we have it coded as due from shareholder. So you paid for a training class, and some of them are a lot more than this. I've seen $6,000 to $20,000.
Up to 75 is what I've seen recently.
75. Wow. Okay,
Yep.
I'm in the wrong business.
I'm going to do one for 70 and give everybody 70. Might as well do one for 70. Yay, there, yay. Yeah.
So back to that Schedule C. When you're CPA, let me pull one up.
While you're pulling that up, Debbie, or actually Jamie, maybe a question for you. The question was, what are the benefits of loaning to your entity as opposed to just making a capital contribution?
Well, the one is that you do get, if you're looking for cash flow, it is, I have some loans personally to my business and I get monthly cash flow back out from my business. That's not considered an owner draw. So if you're not showing a big profit, but you still want some cash flow back to your personal side, that's one way to do it. It's also the interest on that loan is an expense for your business.
But it's personal income as well.
It is true.
Mm-hmm.
That you should report.
That you should report.
Yes, that might be a 1099 thing. Okay, so the Schedule C, see what it's called? Profit or loss from your business. So your CPA has to fill this out, and he's going to take the numbers from your books, and he's going to drop them into this. So advertising, you pay commission or acquisition funds to somebody sometimes. You have office supplies. You might have rent of a space where you lease. So if you'll notice, nowhere on here does it say training and education. Nothing. There is no such thing as training or education for an investing business. It's when you're doing those classes and you're learning and trying to decide if you want to be an investor, that's like self-help. So technically they're not deductible. That always freaks people out. But it's not like you can't take them, right? If you go to a networking meeting, a meetup group, you have a meal, well, it's not training. You just code it as meals in restaurants. Or you buy a book to read, then that's office supplies. It's not training. So there's ways to capture those things.
Membership? What about memberships?
Online services. Sometimes we'll do it as an online service because it's something online. A membership is, I joined the Better Business Bureau, or I joined my Chamber of Commerce, versus there's all kinds of those online services that you join. And so we just put those as computer and online expenses.
Like I joined the United States Foreclosure Network, which basically is kind of a networking group but it's not educational. It's more of kind of some membership for networking, things like that.
Yeah. And nowadays, back in the day, everything was in person. Now all of those things are online. So it was truly a membership because you went someplace and you were part of a group and a member. And so, like I said, we kind of hide or code those things as online services now.
I'm just upset that you did not let me deduct my massage chair, which is my therapy chair, to deal with borrowers. You and my CPA told me no, so kept it off.
Did I see that on your books?
No, you didn't, because you told me I couldn't put it on.
What did I? I have seen some interesting things. Oh, I see speeding tickets sometimes because they got a speeding ticket going to a rental property. I'm like,
that's
no,
good.
just no, it's not. Shouldn't be on here. Don't pay for those things out of your books. And think of it this way. If you have to show your books to somebody, what do you want them to see on there? That you were
legitimate office expenses, phone, computer, printer. If you use it for your office, it's legitimate. I mean, some people may have a TV that is for their office that they use for a monitor or something, but I mean, it's basically got to be used solely for that purpose.
I guess so. Scott is saying use your self-directed HSA.
Yeah, that was for the massage chair.
Yeah.
yeah.
Pretty good.
Yes. So this is the thing with CPAs. Some will just put this as an expense and just take it as an expense. But some will code it as due from shareholder, especially if it's a large amount. Like this one probably could be an expense and it would be just fine. But you cannot put $20,000 worth of training and education as an expense.
Yeah, there was a guru who had like a $15,000 training course who was touting that, hey, it's a business expense. You can write it off. So, take my training because it will be a deduction on your business and you can write it off from your income. And you got to be careful. Talk to your CPA. Don't listen to gurus.
And it's definitely I've heard. I mean, some do it and some don't, or some of them will leave it as a startup asset and they'll take almost like depreciate some of it over years as an expense. But just because a CPA might do it doesn't mean it's right or wrong, right? So one will do it, one won't, right? So that kind of tells you, right?
Yeah, like I had the software I have loan servicing software, and it was a 5-digit expense. And I remember when it went in, it was like, we got Debbie and my CPA, we explained it to what is, because is it an asset that we had to depreciate or a one-time expense, and, work that out. But it's, this stuff is, you have the conversation with your group and then determine how it functions. Somebody mentioned personal development coaches, if that would be a business expense.
Same thing, pretty borderline.
Yeah, because I know people like have business coaches and stuff like that, and so forth. So, and companies sometimes will pay for people to have those. Are those? So again, that's kind of a borderline thing where you really should run it by your CPA first.
Well, and here's the other thing is that you need to figure out if you have income in your business, because you can't have any income and you have $20,000 worth of expenses that are things like this, right? So, but there is certainly development costs when you're starting a business. And so that's kind of what that one CPA was doing. It was kind of a startup development cost. But just keep in mind that if you don't have income, then you really need to think about what your true company expenses.
Probably need a better personal development coach then.
Yeah.
Hey, Debbie, what about licensing and costs for hours or expenses to renew licenses, like realtor? Say you have to take 20 hours of realtor training every year.
Yes. So mine are direct. I'm a realtor as well here in Texas, and I am required to take continuing education classes, and all of those are deductible, training and education.
Okay.
Just like doctors probably have certifications, or absolutely, if there's things that you have to have, then they're required.
So like a note investor, if they wanted to be an MLO, or you wanted to get a state license in the state of Georgia, for example, for your business, that has costs and fees involved. That stuff is things that would be considered deductible.
Yeah. But you have to also say, if I'm an investor and I want to have my real estate license, because I just think that'll help me and help me buy properties and things like that, they don't cross over. They're two separate companies, basically.
Yeah.
So you also have to determine, is that license that you're getting its own business, or is it an expense for an existing business? So you kind of have to watch that as well, because I get a 1099 from my broker, right? So that's a completely separate business to be an agent than whether I'm an investor or doing bookkeeping. Okay, so part of your balance sheet, and again, I don't want to keep you guys too long. So you're going to have all of your assets here. You're going to get that principal from Madison, and you're slowly going to get your money back. You're going to have a bunch of holding costs here along the way, unless you just don't for somehow and you're one of the lucky ones, but you'll have your expenses. So those are the holding costs. If you had a credit card, it would be here. And this is where your JV partners are when they give you money. They sit over here as a liability, right? You owe that money back.
So,
and if you get interest from Madison, it's going to be put down here too, because you owe them that money back.
So Debbie, one thing I think people should understand too is if you buy a note for $15,000 and have the JV partner give you $5,000 for holding costs, it doesn't matter. They give you $20,000. Correct?
Yes. People will try to, this is a big thing. They'll say, okay, well, they gave me $15,000 to buy the asset and $5,000 for the cost. And like, how do I put that on my books? Like, well, really, that's just how you justified how much money they're going to give you. But you owe them 20 grand regardless. And you never, in your books, you're never taking that $5,000 and subtracting costs from it. Like those two things are not going to be coded together on your books anywhere. And people try to, they're like, how do I subtract those costs from that 5,000? You don't.
No, but you can collect a fee up front from a JV partner.
Yes, for the cost.
Right.
Yeah, yeah. So we're
like
saying
an acquisition fee or something like that.
Yeah, exactly. Yeah, and some people do that too, like just $1,000 or $2 just to cover their.
For anyone that, I'll mention, that doesn't, I strongly recommend you do. And the way to explain it to people is, you've got deals where you pulled title reports, you didn't get the deal. I mean, all that lost opportunity cost, you got to recoup that some way. And, you got marketing, you got overhead. That doesn't get broken out into a JV deal. A JV deal is kind of in its own little box, but you have all these costs that you're going to have that you kind of got to figure out each year. How much you're going to spend, how many deals am I going to get, but what is my, my fee that I'm adding? And it could be $500, it could be $2,000, depends on what it is. And just make sure you stipulate that and put it in your agreement that you're charging that fee up front. But it's not, it's not uncommon. I know a lot of people that don't do it, but it's, it's important to do, because if you got 20 notes and you're going after and you don't get 10 of them, you may have just dropped, $3,000-$4,000 on due diligence, and you've got no way of recouping that.
Yeah, I didn't do that initially, and then I do it now.
And then you're like, I'm not making money on that.
Right.
I need to recoup that cost. Yeah, and those things are, that's why we have Chris and Jamie, and they're going to teach you all of those learning from experience things. But as you put it in the books, then you're like, oh, how, now you can really see how it affects the bottom dollar of your business, right?
Books don't lie.
Books do not lie. We see that.
Anyways.
Oh, they shouldn't. Yeah.
We see that very, very often. Okay, so when you're doing your books at the end of the year, the whole purpose of having these awesome reports, besides you actually watching and tracking your company, is that you give them to your CPA, and they do drop those numbers into your tax return. So I'll have people sometimes, like Chris was saying, we ask a CPA about what can he take, what can't he take, so that it gives us an idea. But I'll have people who want to ask the CPA a bookkeeping type question. Well, I'll ask my CPA how to code that. Well, 99.9% of the time, I can tell you how to code that. They might want to do something different with it on the books, which is sometimes okay and sometimes not okay. But your CPA, this report right here is called, this is called a balance sheet with detail. And the other one was a profit and loss with detail. CPAs will tell me when I'm going to send it for my clients, do not send me this list. They want just the P&L, and what that means is all they see is the heading and the total amount. They do not want to see the detail.
In the subcategories, so they know what was like office versus for the Schedule C, correct? Like what was
right. Yeah, so all they'll see is collateral storage, $70. Computer expenses, $2,100. They don't want to see that detail, right? Because for one thing, they don't do books, and it's not their job to go through and make sure your books are correct either. And they aren't responsible for some of the things maybe that you have in here as well. So you want to make sure, you want to make sure your books are correct, and you want to learn those things along the way. And most of the CPAs I work with are really awesome, and they certainly know what you can take on your tax returns and what you can't. But I have CPAs who tell people things that are completely incorrect. And so sorry if I have a CPA on here, but I have a CPA telling a client who was commingling funds, and we kept coding everything as due to this other company or due from this other company because they kept using one LLC to pay for other things. And the CPA said, that's okay. That is never, ever, ever okay. Like Chris, he's like, what? Yeah. This has been going on for 2 years.
And here's the thing that, you don't do this. When people get worried about commingling, you will pay. There's going to come a point in time where you pay with the wrong entity or something like that happens. Then it's just a due from. You may use your personal account because you didn't have, you got a call that the taxes need to be paid today or it's going to tax sale and you're out and about and don't have your business credit card. There's a point in time when it's like, shit, I have to pay with my personal, but then you just mark it and it's like, okay, due from, and you just do it. You don't do it every day. There's going to be an occasion where, I've got an entity A that was like, oops, I thought it was owned by entity A, it was owned by entity B, and I paid with the other entity. And it's like, and Debbie's like, hey, is this a new asset? I'm like, crap, it's from this other one.
I'll give you my son did Debbie and I talked about this. You remember my son had I don't know. He logged into my wife's Amazon account and bought something through audible.com on our one LLC's account. And it's like, there's some more stories that are better than that one. But it wasn't, I'm not going to jail over that. It's like,
right. And so in your books, like Chris, like they're both saying, we can code it like, oh, you accidentally paid from the wrong company. So then we code it as due from the other LLC. The other LLC just writes a check to the first LLC and it gets cleared off your books. So it's coded correctly and that stuff happens. And so what the CPA is sort of saying is we have it coded correctly on her books because we have it coded as due to or due from this other entity, but it's not accidental, like intentionally just using this LLC for like 2 years now. So what the CPA is saying, he's getting the numbers off of LLC number 1 to record on their taxes for LLC number 2, but it is not okay.
Yeah,
Chris is squirming. He's like, what?
With that, I mean, 2 things I want to say. One is CPAs are like, I'll say doctors. You want a CPA that does real estate. If you have a headache, you don't want to see a doctor that specializes in feet. Same thing with a CPA and a bookkeeper. I actually have to use 2 different CPAs because my wife works for an international organization and a real estate CPA can't figure out how we have to do her taxes. But on the same token, that tax person can't figure out how to do real estate. So I actually have to use 2, unfortunately. Same thing with a bookkeeper. There's bookkeepers and CPAs out there that will tell you like, oh, if you do a loan modification and the balance UPB goes from 20,000 to 100,000, there's a section in the IRS where you have to take that as shadow income from the year. And people get all flipped out because there's a CPA out there that teaches this and says, oh, you got to pay me and I'll do your books the right way and not have you pay for the shadow income and stuff. Where the reality of it is, if you treat if your note like a business, you do everything the same, you have income, expenses, you notice on the books, you do not see UPB, you do not see payoff, you don't see total payoff, you don't see interest rate. You see none of that on your books. That's important for people to understand and realize. Like somebody posted in the group the other day, well, the UPB goes in, no, your UPB on a loan, the loan information goes nowhere in your books. It's your money that goes in your bank account and the money goes out of your bank account. That, if there's one takeaway from everyone today, that's probably one of the many that people also have to realize.
Yeah, exactly. Because it's kind of fake money. I mean, maybe you have a note for 20 and it's worth 50, but there's no guarantee that you're going to get 50.
Yeah.
It just depends what happens, right, along the way.
Unless you're buying it from me, right, Jamie?
Right. The other thing I've heard a CPA tell people is you don't need a W-9 for that person unless you're going to send a 1099. I hear that.
Mm-hmm.
Well, my CPA said I only need one if I'm going to send a 1099. And it's just incorrect. And here's why. So they're thinking, they ask you, they're like, did you send 1099s? Because when they do your taxes, they have to mark the little box that says, did you send 1099s? Right? So they're kind of just thinking of it on that side of it.
Mm-hmm.
They're not telling you how to run your business, your day-to-day operations.
So Debbie, I was just curious how you got involved with notes specifically. I mean, there are a lot of, as you know, there are some bookkeepers out there who are not familiar with notes, as I know very well.
Yes.
So, not your whole life history or anything, but
well, it's about maybe 6 years now. I was interested in real estate investing, flip rentals, that type of thing. And so I was going to meetings and I met a CPA who only did real estate investors. And I was an accounting manager at the time and kind of wanting to go out on my own. And so we just happened to cross paths. And so he started sending some clients my way because he used to do their books, but he was so large, he just didn't want to do that side of it anymore. So I really feel blessed that I feel like I learned from the best. And his name was Keith Borg. And he since sold his practice and now just does investing. So they buy hotels and, all kinds of things. They have their hands in everything. But he had said he spent 3 years digging in to make sure he knew exactly how to code things for real estate investing. So I got to learn from him on the real estate side. I mean, I already did the accounting, right? The expenses and income. So I got to learn from him. And then, so I started with kind of flip and rental people. And then I met Adam Adams, which there's a name out there kind of in the notes. And I connected with other notes investors through him. And then it just kind of grew from there. But in general, if you know how to do bookkeeping and a profit and loss and a balance sheet, it really does go across all entities. Real estate kind of freaks some people out, but it's still assets and liabilities. So if you just know how to treat them, it works. But but you have to know also what you're talking about with the notes world. Yeah. So true. That's how I got started.
I mean, one of the things that I advocate for people, because as you start within your note space, you're trying to reduce as much cost as possible, and who you hire for consultants and stuff. And for me, I think a bookkeeper should almost be near the top of your list. And the reason I say that too is, when you start buying notes and you do go file your taxes, if your books aren't correct, your CPA, they may, if you look at what, in Debbie block years, a CPA charges you versus a bookkeeper charges you, you could almost eat up what what you paid that bookkeeper. I mean, what you have to pay your attorney to fix all the screw ups, what you could have paid your bookkeeper in that year. And you basically did all that labor and work for free, which takes you away from doing what you're good at, which is buying notes. If you're good at buying notes, why do you want to spend time trying to buck your ears, Debbie? Spend time trying to figure out your books. It's just, it's crazy. And it's something that if you leave it to an expert, they're good at it. They get it done. It's kind of like, riding a bike. It's, they know what it is. They code it. If you don't know what you're doing, you're going to spend hours per month doing this. And it's just going to be like, time that you could spend doing things that are much more beneficial, I think, for your business. That's my opinion. I'm curious for James' answer as well.
No, I wholeheartedly agree. And I wish, my only regret is not switching over to Debbie earlier. And
very nice.
and I will say too, I mean, this is not an infomercial, but I've mentioned this on another podcast episode, but I mean, you did help me catch the fact that I didn't have insurance on a rental property, not just a note, but an actual rental property, because it had been canceled 3 times, long story, blah, blah, blah. But, it's my fault, but I thought I had it. And
but there's so much going on.
Yeah.
And when you put it in black and white in your book, and then you're like, wait a minute, I paid for insurance and I got a credit, so I don't have insurance anymore.
So it can really help you in ways that aren't, directly related to your books as well. So,
and keeping your books up to date, like, I mean, I can rattle off a dozen things, like looking at your holding costs compared to the advances where your servicer, because you paid a $3,000 tax bill and all of a sudden the servicer says, here's the payoff. And it's like, wait a second. It's like, oh, anytime I get a payoff from the servicer, I go back and look in my QuickBooks to see, okay, did I have any major expenses that were not accounted for? Because you want to make sure, if all of a sudden they get a payoff, they refinance and you forgot to include taxes, guess what? You can't go back after the fact. So Debbie, a question came through, and I think any of us can. Should a CPO not only be familiar with real estate, but also located in the state you're located?
So familiar with real estate's very helpful, yes. Same state. I guess it would just depend on the CPAs because, just their familiarity with how real estate might be handled in certain states, right? So it might just depend on their expertise, right? If they're comfortable with multi-state, because I certainly have CPAs here in Dallas, and I know, even my clients have rentals in a few other states, and they're able to handle it just fine.
My CPA, my whole team is down in Texas, and my other one that does with my wife is in DC. So actually, I don't have any in Virginia where I live. But this poses the question that, and again, Debbie, I'm not sure if we can answer this because it comes up a lot is, okay, I bought a note and made money in Ohio on that asset. Do I pay Ohio taxes or do I pay your state taxes?
So I've seen their tax returns. So I ask my clients to also send me their tax returns at the end because I want to look and see how they took our numbers and what they did with them. And so I will see those tax returns that have like a Texas portion and a California portion. So they do have to file certain forms in different states. Yeah, and so CPAs are awesome, and I don't want to make anything sound like I wasn't saying that, but they just aren't always looking at how you run your business and your day-to-day operations, right? Yeah. They need to take your numbers and do the best with your numbers for you that they can do. But they aren't always thinking about your business being in compliance.
Okay, so people who still got, most of the people still here, what questions do other people have?
Yeah, because that was my last thing that I had on there.
Okay,
and also people always tell me later when they listen to this, they freak out about that whole training thing. So again, doesn't mean we can't capture some of those expenses. I just like people to think about it before they go spend $20,000.
Don't bank on it, especially if you don't have the income.
Yeah.
So everyone on, if we sent you logged into QuickBooks right now and had you put in the acquisition of an asset and then some payments coming in door, everyone be good, right?
Yes. So I'm sorry if it was like you thought we would learn how to code tonight, but really just trying to show you that your books will line up with your business, just day to day. Every transaction, it will line up.
Coding is similar to like owning a note. it's, depends. There's not a one size cookie fits everything. There's certain things that are always the same, but then there's, late fees and how are late fees calculated. I'll be, upfront and tell you that, servicers, certain ones are much better at recording payments to put into the books than others. I'm going to be either completely gray or bald come mid-January when I get my forms from Allied, because it's going to be a disaster. Madison, after I slapped them around for a good amount a few years ago, I think they learned and now actually put in their system a report they can just pull them to match. I think that was because of the conversations that I forced, Debbie and I forced Kevin and their accounting department to sit on a phone call for a few hours to show that the numbers didn't match. So,
yeah, because everything has to be reconciled, right? Everything broken out. Because with Chris, like, let's say we had 10 assets and we had everything broken out all year long from Madison, and in the end of the year, it didn't match their report. So we're like, okay, well, 5 of them matched and 5 didn't. So what happened along the year that wasn't on the original report they sent us? So.
And that's one thing, again, with your books that people don't realize. At the end of the year, you want to reconcile because they may have coded $2,000 of payment that went to interest where it should have went to principal. And if you're splitting your interest with your partner, you overpaid them $1,000, and, or, there's a lot of things like that they miscoded it to the wrong asset and then you paid the wrong JV partner. You don't think these happen. This happens more than you think. A lot more than you think. So
that's why we say the books don't lie, right, Jamie?
That's right. Well, and you're also helping Madison because they get audited too, right? So
yeah,
it's a win-win.
Yeah.
Debbie, you guys mentioned already that you are doing the training sessions still, right?
Yes. So I help people in 3 ways. I can completely set up your QuickBooks shell for you and like do your initial data dump for you. Because maybe you've been doing it all year, but you haven't started QuickBooks yet. And so you have some data. I can do that initial data dump, and then with that, I'll spend an hour with you just saying, okay, here's what I did. I set this up, and now here's where you take off and run with it. Or some of my clients, I just do a quarterly or like every 6 months, I do a review. They do their own books, and we just do basically a half-day session where we go through their reports, fix anything, recode anything that we need to do. And then, of course, I do monthly books for my clients as well.
And, for some people, if, you're also just getting started out, like you just bought a note, technically you can still do this in Excel. If you don't have a lot of expenses, income, I mean, it's probably not recommended, but if you are, I'll say, cash strapped on things, you track your income expenses and stuff, again, it's not recommended, but, it's something that I see people do. As well.
And again, start with that desktop version and don't do the online. Is going to be, I mean, you can sign up for like 20 or whatever, but it's really going to be $40 or $50 a month. So you're talking $600 a year versus a one-time like $300 payment for QuickBooks Online or QuickBooks to desktop, and it's an easier program than the online version.
And someone did ask about the desktop QuickBooks, which version for business, because there's different ones.
Most of the time you can use QuickBooks Pro. There's QuickBooks Premier, which just has a lot of extra bells and whistles. So you can look on the Intuit website and just see those extra bells and whistles, but basic accounting is basic accounting. And so all of their versions really can do the same thing, right? So, but look at the Pro, that's probably where you want to be. I have what's called the accountant's version, and you can even buy that. It doesn't mean you have to be an accountant. It just has a few more, again, just a few more bells and whistles and things that you can do, a few more reporting, but still does basic accounting just like the other programs.
So let me ask this question, Debbie. If someone were to hire you to do their books for them, would you still recommend they have a version of QuickBooks?
So I have clients who I tell them, I have the QuickBooks file on my computer, but if you ever want a copy of it, I can send it to you. And Chris happens to be somebody who does get a copy of his QuickBooks. And then you can open it up and you can look at things, you can run reports, do whatever. If you delete it or blow it up, it doesn't matter because I have the original. We don't share the file, right? And so I tell people that and they're like, oh, that's cool. I'll get that and I'll run reports every month. And then they never open it and they never look at it. So yes, you don't have to have it if I'm doing your books, but if you have it and you want the file, it's just like sending you a Word file or an Excel file. It's just a file that you'll be able to open as long as you have QuickBooks. And if you want to play around in it and run reports, then you can have it. You don't have to have it, but you can.
I like to have it because then I can take a specific asset and just run a P&L on that or a balance sheet. So if I'm trying to, if you're starting out and you have a few JV partners and, you need to send them the books instead of getting the one big Excel file and kind of like deleting everything and just shrinking it down, you literally just, click on it, balance sheet, and then you can either do it for, the entire period or for that year or for whatever period of time. It's just, it's a convenience, I guess. I mean, it's probably not mandatory, but it's probably something recommended.
Because the report is really easy, isn't it, Chris? Like the reporting is,
Yeah.
and there's lots of options. And
I mean, I have no clue how to put a check in QuickBooks. I have no clue how to do many things, but I know how to run a balance sheet report detail. I know how to run a profit and loss detail. And basically, I can do that. I can manage my business just off of that.
Yeah. Yeah, it's nice. Just a little button, report. All these reports.
Sean, you could get a CSV file as well. The reports Debbie typically sends are Excel, but she could, if you had somebody, they can export them as CSV as well. You can export them as PDF. So very.
Yes. And you can email reports to yourself. You can export them to Excel. You can, PDF. You can do all kinds of things.
And it's nice because if someone says, hey, you only paid me $1,500, it's like, you can go run the report and quickly see like, no, here it is. Because the other thing too is, sometimes something you may have miscoded something, incidentally, not Debbie, but like I said, oh, Debbie, this one goes here, where it was actually like, especially have a JV partner that has two different assets. So you may have actually paid them, but you may have actually in your bill pay system, you put it for the wrong asset. And then you realize like, oops, later on, just having that, it's not showing, it's very difficult to see when you get a big report, but when you run it, everything by each asset, it makes it much easier to see as well.
Yeah. Okay.
And, the other thing I'll mention too is, from a bookkeeping perspective, it's not, it's affordable. It's not tens of thousands of dollars that you're spending for, bookkeeping services.
Wait, you don't pay that much?
What's that?
Shh.
Oh, just kidding.
I may actually, I don't know. But I do have, I don't know, 6, 7 entities. In the grand scheme of things.
No, it is very affordable.
Yeah, it's, when you have like an entity getting going and, Debbie, correct me if I'm wrong, but you basically will look at kind of somebody's business and, every note investor is not the same. For one business, it's, you have one asset, you have 50 assets, you have 1,000 assets, it's kind of structured from that perspective.
Yeah.
So my entity with with 150 notes versus Jamie's with 50, Jamie will pay more because I'm a nicer guy, but typically 150 notes will pay more.
You pay with personality, right, Chris?
Yes. And sometimes within their books, some assets are handled one way and some are handled a different way. So,
I'm glad that Jamie, you and Debbie get to handle those New York assets now. So.
Oh gosh, Debbie, I'm sorry.
I know it's funny when I see an address and I'm like, man, I've seen that address for like years now because
Right.
it changes from one investor to the next.
Yeah, you're not going to like these.
I'm like, oh, or I'll just see who they sold it to. And I'm like, oh, that's my client. So now I'm going to see it on their books.
So everyone, I'm going to wrap up. We've been on almost 2 hours. Debbie, what's the best way? Can you go back to that front screen again, maybe? So people, where they can reach out to you?
Yeah. So that's what I just have here. I can set up your QuickBooks. I can help you one-on-one.
Yep. So if you go to dmbookkeeping.net.
That's me. Yep, this is my email, the dmbookkeeping.net. And that's my cell phone. My office phone, I don't answer it, just FYI. It's just there for voicemail or if I have conference calls or something. Because 99% of the calls I get are junk.
Yep. And your email, I actually don't see your email there.
Oh, sorry. It's
Yep.
not. It's the DM booking. It's a Debbie at DM.
Bookkeeping. Yep. So, reach out for Debbie if you are an animal lover as well. Debbie is heavily involved in adoption, rescue, donation, and volunteering at barkfordogs.org. That is something that, I'm an animal lover, so, something as well for individuals. But like I said, I highly recommend for people who are serious about this business, reach out to Debbie, have the conversation, and kind of see what fits for you, whether you think you can take it on yourself and do quarterly, annual, or, just say, Debbie, please take these from me. And I'd recommend that if you do, to do it sooner rather than later, because, I'm guessing that if it's a complete disaster that's been for 2 years, you probably end up paying more. Sorry, but that's really how it works. So
Yeah.
not going to speak for Debbie, but I know I would charge you more.
Let's see, I'm getting ready to send out new engagement letters for next year, Chris.
Yes, so I'll need to send you the scroll of all the entities
Yes.
that we've got, because I do have several others that we need to got the new fund that launched, and I have another one as well that gotta throw in there. So
If you do email me, I do return emails, not always timely because I spend my day on whichever client I'm supposed to be spending my day on. So it's always my little disclaimer, but when I do address my email, it's there. It will never get deleted until I address it. So.
And I think she does people's books alphabetically by last name, not first name, because Jamie always seems to get his or I get mine. So just mentioning that.
I think it's more that it's the low-hanging fruit, and
Funny
it's a
story.
warm-up for yours.
No, funny story. Before we get off, like Debbie and I, right now, we go through like 5 entities, and we always start with like Seveney investments or my 401k, because those are like, those are softballs. It's like, okay, we can spend 5 minutes on those.
Yeah.
Those are easy.
Yeah. Then it's like, okay, then we get to Onyx are great, because actually a fund, by the way, people, if you have a fund, funds are easy too, actually, believe it or not, for books compared to a JV.
Yeah. I like them. Yeah.
Yeah. So then we do the fund. Then it's like, okay, we get to Onyx are great. It's like,
I have one LLC
like,
with I have one LLC with one rental property. It's growing, but I seem to get that one back first.
Well, it's because I actually do them. I don't send any until they're all done. But when I start reviewing them, I always review the easy ones first.
Makes sense.
yeah. Like I got 2 entities, and it's a matter of like, do you want to like, stab yourself in the right arm or the left arm? For that one, and then we'll hit all the other ones, and then it's like, okay, can we do these tomorrow? It's like you want to just procrastinate and put them off.
I really appreciate when my clients understand that about their books.
So, I mean, all kidding aside, one thing I'll mention to people as well, and this is from me coming from the corporate world: do your books every month. You need to manage, and you should understand, where you stand every month. 3 things, from my corporate world is you always want to know your cash position, how much your money you're making, and, basically, where things stand overall. So, I mean, the top 2, you definitely want to kind of know, okay, what's my P&L? What's my cash position? And then what's coming down the pipeline? Am I taking a hit? Am I going to be making some additional money? Those are 3 key things, because what you don't want to do is you have an asset that you own and all of a sudden you're going to lose $10,000 on. You don't want to go all of a sudden take a distribution that all of a sudden now it's like, I got to put that money back, and I just use that money to pay for, college, kids' college or something. You got to be, you should always focus on getting your books done on a monthly basis.
Yeah. And not to drag it out, but I think one of the things I always hear is when we're an asset's being removed and we're calculating the gain, sometimes there's a loss, but a lot of people are like, oh, I thought I made more, because all of your expenses are in QuickBooks. We're on the Excel spreadsheet. You might have missed writing something down. You're like, oh yeah, I forgot about that $3,000 in taxes that I paid. So we're always like, oh, I thought I made more, because it doesn't lie. It's in black and white. So.
Well, Debbie, Thank you as always. This is kind of like our annual, basically we do this annually. We're going to do this again. We'll probably do this, honestly, probably in, you know, definitely not April, but we'll do, typically we do one in the spring at a point in time, and then also do another later on, of course, towards the end of the year, typically November, December timeframe, to remind everyone that's chasing all these W-9s from people that they can't get out the 1099s because they don't happen. And you're going to laugh. I'm telling you people right now, you're going to see come early January, people complaining on Facebook that, oops, I don't have W-9s from people. And it's like you had all year to get it. Just like, I'll say, going to vote, you knew the election was coming. Like, it's,
One thing I will add at the end here is I did, Debbie, I did a Facebook poll. You may have seen it, but in the group about, podcast episodes and podcast topics. So I think bookkeeping was the number one, or it was close to the top. So I guess our group does understand that books are pretty important. So
Yeah.
that's a good thing.
Yeah, it's good. And you'll just be amazed at what you learn about your business as you're breaking things out. You're like, oh, wow. So yeah, it's,
Well, you're right. It's interesting because, like, I'm very analytical, but I'll look at what was my lost opportunity cost last year? How much did I spend on title reports and BPOs that I didn't get? And that's an important number to know. How much am I spending on? And the other thing too is, like, Debbie will say, like, you realize this bank is charging you $5 a month because you haven't done anything. It's like, damn, and you'll pick up those things as you do your books, or other costs that, oh, I have this subscription for $20 a month that I completely forget about. I never use. It's like, it's a good time, especially now the end of the year, to go through and look at them again and see, like, I don't use, cancel, for things that, because as your business evolves and grows, you're going to change, and it's not going to be the same system you use as you continue to grow. I've used 1,000 different systems and spent thousands I shouldn't have, but it's, another important factor. When you do your books properly, you can easily spot that.
Yep.
Well, I think we will wrap up as we gave people a good 2 hours of bookkeeping. Debbie, thank you as always. Jamie, spent too much time with you today, but it was
Thanks for having me.
Yep. Thank you,
Thanks, Debbie.
everyone. And thank you. Take care and go out and do some good deeds.